I would like to highlight 10 winning contrarian investment strategies. As I earlier discussed in one of my video, uh, when it comes to contrarian investing, you are going against the crowd. Your actions are contrary to what is obtainable in the market. When others, when the vast majority of investors are selling, that's when you are buying. When the vast majority are buying, that is when you should be selling as a contrarian investor. So let's look at these strategies one by one. Number one, buy during market panic. You buy your stocks when the market is in a panic mode. Invest in stocks or assets that are heavily discounted during market downturn or usually during economic crisis. When the economy is in a crisis in a state, it affects the stock market. That's a buying opportunity. And so the idea is to buy when others are selling out of fear, when they are selling out of panic. By that time, the stock price will certainly go down. You will end up buying at a cheaper rate because of the mass selling in the market. Number two, seek out undervalued stocks. Look for companies with strong fundamentals that are trading below their intrinsic value due to a temporary occurrence or negativity in market sentiments. You look at the company selling at a very cheap rate, undervalued because probably it's passing through temporary difficulties. As long as the difficulty the company is passing through is temporary, it's not a long-term event, then you can go ahead and buy the shares of that particular company, believing that all things being equal, the market will correct itself and the company stock will go up, will rise up as a result. Number three, invest in neglected sectors. Some sectors could be neglected for one reason or the other. So identify these sectors that are currently neglected or are out of favor, but have strong fundamentals and strong long-term prospects. They might include traditional industries facing short-term challenges or emerging industries that are undervalued. So these are prospects you must consider, and these are opportunity for you to invest as a contrarian investor. Number four, analyze insider transaction. In every industry, in every sector, in every stock, there are insiders. So pay attention to insider buying activities. When an executive or a board member is buying share of their own company, it might signal confidence in the company's future, even if the stock is currently underperforming. An executive, an owner of the company and other insiders they know why they are buying. So don't ask too much questions because they may not explain these things to you. As they are buying, as they are accumulating shares, please follow them and accumulate as well. And if they are selling, you should also know why they are selling. And probably I wouldn't advise you key into or you maintain a holding in the company where insiders are just selling and dumping their share. There could be a reason why they are, why they are selling. So take this into consideration. And not only that, number five, explore small cap stocks. Research small cap stocks, get to know them better. Small cap stocks are often overlooked by mainstream investors. These big fund managers, institutional investors, they have big amount of capital. So they may not, the capital, the share outstanding of a small company may not be attractive to them. So they tend to concentrate on mega caps and large cap stocks. So the very fact that they are neglecting these smaller cap stocks will make the stocks to be undervalued. All right, and that gives you a buying opportunity. So they can offer, a significant growth potential, though they may come with a higher risk and volatility. You should not bother yourself so much about that. But as long as the potentials, are there, you can key into opportunities in these smaller cap companies. Number 6, look for high dividend yield. Invest in companies with high dividend yield that are out of favor. When we talk about dividend yield, that is a percentage, of their profits they are paying out, as dividends, a percentage of their stock price they are paying out as dividends. So high yield can indicate undervaluation, especially if the company dividend is sustainable. Usually, the higher the yield, it's believed that the company is somewhat undervalued. It's because undervalued stock generally used to produce high dividend yield compared to stocks that are relatively overpriced. Number 7, consider turnaround stories. Consider turnaround stories. So invest in companies that are undergoing significant restructuring or turnaround efforts. If the company recovers, quickly, or if the recovery plan of that company actually works, then it can offer substantial upside potential. I want to share a little bit of my experience this past, I think 2 or so months ago. A particular stock, in my country exchange had been sustaining losses for a very long time, for a considerable number of years. So eventually, they tend to they diversified into financial services. Immediately they diversified, the company started making profits. So this particular company, rose from around 28 kobo at the beginning of the year, 28 kobo. And I was able to buy I bought the first tranche at 84 kobo. I think I bought again at 92 kobo. I equally bought another tranche at 1 naira 71 kobo thereabout. Currently, the stock is selling at about 3 naira 19 or 20 kobo thereabout. Imagine people that bought at 28 kobo and you're holding it up to 3 naira or 3 naira plus. You can imagine that level of compounding. You see, because of what? The company was got involved in a kind of turnaround, kind of process. You see. Number 8, analyze contrarian market indicators. Use sentiment indicators such as this. One of them is called fear and greed index. I wonder why it is they're giving it that kind of a funny name. Fear and greed index, or investor sentiment surveys. You need to analyze these indicators. It will help you, on the kind of stocks you are going to buy. They are there to do what? To help you, to gauge extreme bullishness or bearishness, and find potential contrarian, opportunities. This particular indicator help you to determine whether a stock is in a bearish mode or whether the stock is in a bullish mode, and that will guide you in your investment decision. Please subscribe to this channel and give me thumbs up, and equally press the notification button, and don't forget to drop your comments in the comment section so I can know precisely adjustments I need to make as I bring you contents of this nature. Number 9, invest in international markets. Look for opportunities in international markets or emerging economies that are currently underperforming but have a strong growth potential over the long run. Don't just restrict yourself to your country alone. As much as possible, invest in other economies. Somebody like there was a particular value investor that's popularized this particular idea of investing outside your home market. So search for wherever you have underperformance and invest in those countries, and eventually as the economy, does well in those countries, you are going to also have, an outsized return, as a result. That was, I think the name is Sir Templeton. Yeah, Sir Templeton popularized you know, um, investing outside your home country. It was in the US, but he invested in in other countries as well. Number 10, follow value-based investment philosophies. Your philosophy should be based on, should be kind of like value investing. Although you are a contrarian, but don't forget value investing. You know, buy stocks when they are cheap, buy below intrinsic value, and so implement value investing principles by focusing on companies with strong financial health, low valuation metrics like price to earning ratio. The lower the better. With a lower PE ratio, your investment will do well in the future. With solid growth potential, and even if they are currently out of favor, eventually the market would identify that stock, key into that growth, and then effect a correction. Before you understand what is going on, your investments is going to really yield a sizable level of returns.